Could Bitcoin slow its rise? Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. So let's not waste any more time and dive into our crypto world together. I invite you to follow me on the channel to always be updated. Today we will talk about how Bitcoin is known for its volatility and rapid price swings. But what could slow down Bitcoin's rise right now? Today we will explore a crucial factor that could influence the price of Bitcoin in the short term. One of the major players in the world of financial derivatives is the Chicago Mercantile Exchange, CME, the world's largest exchange for futures and options. Although many Bitcoin derivatives trades take place on cryptocurrency exchanges, institutional investors are known to prefer the CME for their short-term trades on the price of Bitcoin. Analyzing Bitcoin options trading on the CME, CF benchmarks revealed that the chances of a BTC price rally in the near term still appear slim. CF Benchmarks is a company of the Kraken Group, the second largest American cryptocurrency exchange, specializing in digital asset indices. Last month, CF Benchmarks launched the CF Bitcoin Volatility Index, which measures the implied volatility of BTC price options on the CME. At the moment, the value of the CF Bitcoin Volatility Index settlement rate is just below 59.8 points, a level higher than the 54.5 points of May 8, but still significantly lower than the annual peak of 89.1 points of May 1 March. CF Benchmarks analysts noted that implied volatility for short-dated out-of-the-money (OTM) put options was higher than implied volatility for call options following the release of inflation data. Although the inflation data have been positive, they are not yet positive enough to rule out the possibility that the Fed's monetary policy will remain restrictive for a long period. For Bitcoin, this means that investors are still convinced of possible near-term downsides, enough that they are willing to pay a premium for protective put options. The difference between the implied volatility of OTM put options versus that of call options is called volatility skew and, at this time, is still quite pronounced in short-dated options. This indicates that speculators do not believe that a new rally is likely to begin in the coming days. Higher implied volatility for put options suggests there is a majority of bearish speculators in this market. Put options are derivative contracts used to protect or speculate on falling prices, while call options are used to protect against possible increases. In particular, put options with strikes lower than the current market rate and call options higher than the spot market price are considered out of the money. Any price reductions? The implied volatility measure is an estimate of the future volatility of the underlying asset based on current option prices and increases as demand increases. Thus, higher implied volatility of OTM put options indicates greater demand for them relative to calls, and this, in turn, indicates a greater propensity for investors to hedge against. Although these data do not indicate certainties since the markets are not always right, the fact that they are extracted from the CME indicates that it is above all the institutional ones who are still reluctant to believe that the start of a rally in the price of Bitcoin in the short term is possible. However, it is important to remember that in crypto markets, the short term refers to a period of time of a few days or at most a week. This could change if the analysis were extended to the medium short term, i.e. a period of time of a few weeks or a month. The hypothesis circulating is that, as early as next week, things could start to change, even if there is no certainty about this. Therefore, if in the short term there do not yet appear to be favorable conditions for triggering a new rally, these conditions could begin to change as early as next week. It is important to note that financial markets now move at a very high speed, especially thanks to bots and algorithms that have reaction times of a few milliseconds. So, they could change their minds very quickly if crypto market conditions start to change. Furthermore, the current period of lateralization of the price of Bitcoin does not at all exclude a return to $70,000. However, this may not be enough to stop it. In fact, the graph shows the implied volatilities for short and long-term options on BTC with different deltas to price changes. The graph shows that the distortion produced by the publication of April inflation data in the United States was more pronounced on OTM options with expiration between 20 and 40 days. Instead, moving to those with later expiries, the bias shifts in favor of bullish call options. According to analysts at CF Benchmarks, institutional investor sentiment appears to be positive regarding Bitcoin in the medium term, while still appearing slightly negative in the short term. The shift from short to medium short term could lead to a turning point, with bearish sentiment reducing and a relatively short shift to bullish. With that said, thanks for following the video, and until next time. Don't miss the next crypto flight. Thanks for joining us. If you want to stay updated on the latest news from the crypto world and not miss a single crypto adventure, hit that "Follow Me" button and activate the bell. Ready to go? Then see you in the next video.